Should NVIDIA be looking out for Alphabet and its chip ambitions? What about OpenAI and ChatGPT? Should they be afraid of Alphabet's scale in rolling out large language models for artificial intelligence? I'll talk about that and more in this video, where I'll discuss what's going on at Alphabet. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Alphabet now has 6 products with more than 2 billion monthly active users that are using its artificial intelligence model, Gemini. That massive scale gives Alphabet an advantage when rolling out these AI models. Sure, OpenAI and ChatGPT has encountered phenomenal success with its models, but Alphabet also has a significant advantage with its large scale. And that's why I've suggested that Alphabet will likely close the gap, and they have somewhat closed the gap against ChatGPT in large language models after Alphabet initially fumbled the rollout of its artificial intelligence models. They now have 2 billion monthly active users that are using its artificial intelligence across a variety of its products, and those uses are going to enhance the performance of those AI models, because Alphabet will collect the data from the consumer interaction or business interaction, and they'll be able to improve the models based on those interactions. Of course, what most investors are interested about is NVIDIA and artificial intelligence, and Alphabet is trying and making an inroad against NVIDIA in development of chips. Now, Alphabet will not surpass NVIDIA in terms of the leading edge technology for AI accelerator chips, but their entry into the field makes NVIDIA certainly have to take note. Now, Trillium is the 6th generation of Alphabet's custom AI accelerator, and it's their best performing and most energy efficient TPU to date. This provides a 5 times increase in peak compute performance per chip and is 67% more energy efficient compared to TPU version 5e. Of course, Alphabet is still buying NVIDIA GPUs, and the latest NVIDIA Blackwell platform will be coming to Google Cloud in early 2025, which matches what NVIDIA has been telling investors about Blackwell, in that they're starting to ship them out and customers are starting to install them, and the timeline of early 2025 certainly matches with those timelines provided by NVIDIA. Now, interestingly, the reason why companies like Alphabet and Amazon are developing their own chips is because of NVIDIA's dominance. NVIDIA is so dominant in this industry, with the reported market share of over 80%, that it forces companies like Alphabet and Amazon, which are 2 of the primary buyers of NVIDIA's GPUs, to provide their own offering, build their own offering, because they are now at risk to NVIDIA. Because with that much market power, NVIDIA can increase and increase and increase price, and Alphabet and Amazon and others will be forced to pay unless they have another option. And so that's why they're building these out, because the position NVIDIA has in the industry. Now, if the industry for these GPUs was more diversified, if it was more competitive, with NVIDIA having a market share of, let's say, 15%, and AMD having 10%, and Intel coming in with another 10%, etc., with a more fragmented industry rather than such a concentrated one with NVIDIA at the top, then companies like Alphabet and Amazon would not feel the need to invest in their own product, because the market would provide that diversification for them. The market would provide that de-risking. But as it stands, it's too much risk for companies like Alphabet to rely on NVIDIA solely for this product. It gives NVIDIA too much pricing power. It gives NVIDIA too much competitive advantage. It gives NVIDIA too much negotiating power when dealing with companies like Alphabet. And so Alphabet wants to protect itself, and it's now investing in these products. I wouldn't be surprised if, let's say, fast forward 5 years later, and this market for GPUs or AI accelerators is more diversified, with NVIDIA having far less market share, if companies like Alphabet reduce their investments in this category. If they feel the market is more diversified and that risk has decreased, they can then decrease their investments in this category, because this is not a category where Alphabet, it's not the core of Alphabet's business. They're not focusing on this area for profitability, for customer adoption. And so this is something that they need for their business, for their data centers, and for their artificial intelligence data centers. And so if they're going to need to buy these products and they're going to need these for the foreseeable future, they want to make sure that they can create their own supply, just in case NVIDIA gets a little ahead of themselves and really starts to exercise their pricing power. Alphabet has also focused on matching the right model size to the complexity of the query in order to minimize the impact on costs and latency. This is something that these artificial intelligence companies have focused on more so recently, because the computing requirements for these large language models are increasing. The power consumption is increasing and the cost is increasing. And so to keep a lid on these costs, Alphabet is trying to match the different size of the query to the large language models so that they're not using a Ferrari to go down the street to pick up groceries. They're using a more appropriate model for the use case intended. Additionally, their real estate investments, they are taking a measured approach to match the current and future needs of our hybrid workforce, as well as our local communities. And I was happy to see this from Alphabet. Companies that are not capitalizing on the ability to have a hybrid workforce, to have remote workers, I think are missing an opportunity. I think workers are willing to take less money if you allow them to work from home. And it opens up a broader workforce opportunity, because now you can recruit employees from all over the world and not just in the local areas where you have offices, where you have real estate. And then if you have people working from home, that's less office space you need, right? So I think it's a big win-win situation that companies are not taking advantage of as much as I would have liked to have seen. Sure, it's a little bit harder to manage a remote workforce than it is to manage a workforce that's right there next door to your office, right? If you're a manager. But you've got to capitalize on that opportunity and find ways to still manage effectively with the remote workforce, because the benefits to the company are so large. You can have employees working at wages that are 10, 15, 25% lower, and the employees would be happier. They would be more productive because they're working remotely. And that provides a win-win opportunity that doesn't come up very often. And so as a business, when you have these opportunities, you've got to capitalize. So I like that Alphabet is still keeping some hybrid, and they're not saying, well, everybody has to come back to the office. We don't care what we said before. I like that they're maintaining that. That should be good news for investors longer term. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.